Hello everyone. In this video, I'm going to show you something very interesting when it comes to price action trading. I actually teach this method for free in our members account. If you don't have already signed up for a free member account, visit DayTradeToWin.com and you get some videos and some free software to get you started. In this video, I'm going to actually go over the method and explain to you how price action plays a huge role as traders try to understand if the market is going up, if the market's going down, and more importantly, why. You can see on the top of the chart, I have the news indicator. This is a proprietary news indicator by DayTradeToWin. You can get a free trial by getting a free member account at DayTradeToWin.com. So I have here a day that is a recent day here. I'm using a 1-minute chart, and it doesn't really matter if you're using a mini, a NASDAQ, a Dow, a Russell, really any market as long as you fit within these parameters. The idea that the market moves as soon as the bell rings or when the session opens is true. We have a lot of volatility. I have something called the ATR, the average true range, down here. And this tells me that the candles are larger, which means there's a lot of buyers and sellers creating these larger volatile moves. And so you can use a 1-minute chart, a 5-minute chart. I wouldn't go much higher than a 5-minute chart. And really what I want to do, based on your time zone, when that market opens, I'm going to place a vertical line here, like this. At this point, we can see that the market opened and it took a big nosedive. I know that the market has a lot of volatility when it opens, so we have opportunities. You can use the Sonic system, the at the open method, the Atlas line, the Trade Scalper, all those things that we offer works fantastic. But for a lot of traders, they want to start trading when the market has slowed down, and they want to have an understanding if we have a trending day. So as I go further here, the first 2.5 hours become very important. Now again, it doesn't really matter if you're using a 1-minute chart or a 5-minute chart. The data will be the same, where you're going to outline the highest high and lowest low within the first 2.5 hours. And by the way, you can also do this for the London Open, which is 3 o'clock New York time. When the London market opens, they have the same characteristics, I would say, where there's a lot of traders and then the market begins to calm down. And whether or not it's going to trend for the European session or for the London session, that is to be seen. But what I'm going to show you here is the US Open, which we have a lot of action. Now this, what you're seeing here, is really outlining to look like this. So I'm placing a horizontal line at the highest high and lowest low between the first 2.5 hours. So you have to think of this as a huge support and resistance area. I guess that's the best way most traders understand it. Let me just increase here the font to make it nice and big. Save it as a default. I'm using NinjaTrader, but you can use any charting platform, trading view that you feel would work, because it's really the same. We're just using horizontal lines and we're using vertical lines to outline the first candle that starts the session, and then 2.5 hours later, for me, that would be 12 o'clock in my time zone. And this is what we have. Now, I want everybody to think about what has just occurred. Market opens, traders buy, traders sell. There's traders that have placed a position waiting for the market to continue higher or to continue lower. So all this is taking place. The one thing that you should understand, this being the NASDAQ, but same on the E-mini, is that usually the market slows down as we get further into the day, into the session. Now this is true most of the time. I would say maybe 75-80% of the time. But if you see a situation where the volatility stays the same or increases, that usually tells me that we are in a trend or a very strong market environment. So because the ATR is going lower and lower, it's almost as if the market's slowing down, and this is absolutely normal. What's not normal is when we see an increase in volatility, or the volatility stays the same or relatively high as we get further on in the day. Now, as we go further here, there's a few things that we could do. First, I know that this is very strong resistance and this is very strong support. The lowest low of the first 2.5 hours and the highest high. Moving forward, if we're going to have a strong trending day, we have to see the market break above and below this area. That tells me that it's one of those days where it just keeps on going and going and won't stop until the market closes. If you see that, that's an opportunity. Now, you can enter after you see one or two candles closing. You can see, or I should say, you can enter after the market comes down and then breaks it and comes back up. So there's a lot of different ways that you can approach this as a price action trader. So most of the methods that we teach and we promote do not use conventional indicators. So we don't really believe in the RSIs and the moving averages and moving average crossovers, MACD, stochastics, momentum. Those things are good, they have their place, but they're really subjective. There's nothing subjective about this. Either the market's going to break above it or below it, or it's not. If it's not, what we have is a typical day where the market is contained within the support and resistance created within the first 2.5 hours. So again, this is normal. This happens probably 80% of the time. What we want to look for is a day that's a strong trending day where it just keeps on going and doesn't stop, keeps on going, or maybe comes out of it, comes back in, and then breaks out again. So that happens often as well. Now, the first 2.5 hours is important, but there's also the middle part of the day. I call that the B part of the day. The name of this strategy is called the ABC method by DayTradeToWin, and the B part of the day also incorporates 2.5 hours here between 12 o'clock and 14:30. Now, I'm going to do the same exact thing, the highest high and the lowest low, because sometimes we have what's called right there. Sometimes we have what's called a late day rally or a sell-off, which sometimes occurs as we get into the close of the day. So if we see the same scenario where the market breaks above or below, this would be that we're rallying, there's news, maybe the FOMC, there's something happening that's pushing traders, news, earnings, whatever it could be. Something is pushing traders into the close to buy or to sell. And this is something that we should be aware of. So as I go further here in time, you can see that the market closed outside here of the high of what I would consider here the middle part of the day, the B part of the day. It's also 2.5 hours. And for me, it's between 12 and 14:30 or 12 o'clock and 2:30. Okay, so it's 2.5 hours. And really what this is telling me is that as the market goes into the close, traders are beginning to buy, and we see the market go a little bit higher, not too much, but it's still an opportunity that we have to be a buyer. On a 1-minute chart, I would wait 2 candles, maybe 3 candles, and that would be a great opportunity. Now, the software that we have for this does this for you automatically. It gives you an entry. It also gives you something a little bit different. And you can also do this because we know that this is support and we know that this is resistance. What happens when the market hits this and then comes back right inside of the range? So that would be hitting resistance and coming back in. So if you see a situation like that, I would say that is also another opportunity. I would couple it with something else like a roadmap or a blueprint software that we have, but I would couple that to say the market came out here, couple of candles, and then came right back inside. That would be hitting resistance. Same thing is true if it came out as if it wanted to break and then quickly came right back in. And the key word here is quickly, as if it hit support or hit resistance and bounced out of it. So this is on the NASDAQ. I'm going to show you a few other examples. It doesn't really matter. I can come here anywhere in time. So I don't even know what this looks like here. And I'll do the same thing. I'll just come here to 9:30. And just pick any day, it doesn't really matter in reality, and I can understand what the price action is doing. So coming back here, this looks like it's a few weeks ago. We'll do the same thing. Started off at 9:30. This is just really arbitrary. 9:30 to 12 o'clock, which looks like here. And we have, let me just squeeze this up here a little bit. We have something like this. And well, what do you know? This happens to be one of those days where the market breaks out of the range of A. So this is an opportunity to be a buyer. Now, if it doesn't continue, you still have a lot of upward movement. There's a lot of money here to be made on this breakout. If it doesn't continue, have a trailing stop and get out of the trade. But we're going to do the same exact thing. We're going to go from 12 to 14:30, again, the B part of the day, which is the next 2.5 hours, and ideally doing the same thing right here. And so what happens when the market broke? It just kept on going. So you can see here on both sides of the equation, it broke up above, opportunity to be a buyer, broke below, opportunity to be a seller. This is just price action, understanding patterns, and really giving you an opportunity to understand, well, should I be a buyer or should I be a seller? Well, at this point, I know I should be a seller. It's very clear to me. Just up here, I know I should be a buyer. Should I get in on pullbacks? Should I get in on retracements? Should I get in on strength? Should I get in when you have another method that you may be using as well for confluence? So this is really important. Now I'm going to switch to the E-mini S&P. I haven't even looked at it today, so I'm going to go here to the E-mini S&P. This is live. It's now about 12:43 New York time, and I'm going to do the same thing. It just takes literally a second. So the software does it for you, but I'm going to just use this 9:30 to 12 o'clock, which is right here, and I'm going to show you what I'm thinking and how we can play this as the market unfolds for today. So you can see what happened here. I'm going to squeeze this up here. This is on a 1-minute chart. The market's relatively slow, 1.5 points, so this here is a sign that we're not strong. There's no buyers and sellers pushing. So I would consider this a typical day where the market is just really going to do this, chopping back and forth. That's a good thing because I can take support and resistance trades. I can play the channels. I can do this, the channel surfing as they call it. So what happened here? As the market tries to go higher, trading above the zone, it hasn't been able to until this point right here where it's clearly broke out. This is just hitting resistance and coming back in, hitting resistance and coming back in multiple times, maybe 4 or 5 times here. But at this point, and I'm happy to see that this is live so we can actually see how this works. You can take a look at this situation where we have the market now beginning to break out. 1, 2, 3 candles. It's clear that we're moving, and I can take a long. I mean, the ATR is slow. It's clear. Maybe a point, maybe 2 points, trail a stop, break even, do all those good things. Use the Sonic system, use the roadmap. Here I'll add the roadmap. But at least we have a clear understanding of what the market is doing, how we can approach it, and I'll just add here the roadmap here to see what that looks like. And we can also, oh good, so it broke the road, and actually you can see that the roadmap is telling us that the market is finding very difficult to break out of that. Now it broke out here live. Time to go long, not just because it broke the ABC. This is how we combine methods. The ABC method, which I just showed you how we can outline the 3 parts of the day. It's also breaking through the roadmap. If you have any questions, if you don't already have a free member account, visit DayTradeToWin.com, get a free member account, download the software, ask questions, practice, get a free trial, and I'll see everyone in class. Want to learn more? Visit DayTradeToWin.com and get started with a free member account, which includes access to our trials, including the ABC software. Start learning the right way by using price action and avoid using conventional indicators. We offer unique strategies and proprietary software, including the Sonic system. Join Accelerated Mentorship and get instant access to all our software. Let's get you set up in the next training.